What's up, everybody? Welcome back to Be the Trader. Thank you so much for joining us again. Today, I have a very special guest, Ricky Analog. For those of you who don't know him, definitely look him up on Twitter. It's at Ricky Analog. Ricky, welcome to the show, my man.
Thanks for having me, Alex. How are you?
Doing good, man. Doing good. I appreciate you being here. I interviewed Jay Trader, and he brought you up, and it's somewhat, when he brings up someone, I was like, let me reach out to that person too. So I'm glad to bring you on the show. He thinks very highly of you, so I'm really excited to get to know your background. So if you can kind of start and kind of give us some information on where you come from, what got you into trading, and then we'll go from there.
Right on. I'm Canadian, U.S. dual citizenship, kind of lived in both countries. Went to college in both countries. I was up at UBC for a while, went out to Hawaii. I finished university in Hawaii, and I have a degree in marketing, and I took all the business courses that are associated with that. Finance really interested me. And I run a business, an online retail business, which was how I put myself through college. And then when I got out of college, the job market was really crap. So I ended up just continuing on with my personal business. And we grew it to a point where the income was passive enough that I had free time to educate myself on things that were personal interests. So the stock market had always interested me. And I think it had this mystique about it, like that it was some sort of secret club that was really tough to get into. And you had to be a rocket scientist to figure out how the stock market worked. And those are the type of challenges that always interest me, where somebody tells me, oh, you can't do that. That's not for you. That's where I would like to prove people wrong. I noticed that my screensaver popped up on my computer in the background. Go.
Yeah, it's family
photos going. Yeah. So I'm a family man. I got 3 kids and a wife. And, I started educating myself about the stock market. I read all the books that hardly at all pertain to what I do now. It's funny because I started out reading things like value investing and all the trend trading and stuff that's more long-term. And now I'm a day trader. So it's like my actual introduction to the stock market didn't turn out to be where I ended up in the today scenario. But I've been trading for 6 years now. I started actually right around the first pot stock boom in 2000. I think it was late 2013, and blew up accounts really fast, learning the hard way, taking my lumps and bruises, buying trash companies that were being pumped on Twitter, of course. And, I actually count that as a blessing. Blowing up early accounts and learning some really tough lessons is what got me to take it more serious and figure out a new approach, and finally got to a point where, consistency and profitability were in my life. And ever since then, just been trying to keep things on the up and up, and it's an everyday challenge. I honestly feel like the stock market is the toughest challenge ever, and I love a good challenge. So
yeah, man, that's awesome. And so when did you, starting in 2013 during the first boom of the marijuana stocks, when did you start to see your success? And were you starting off as a long-term trader, or were you starting off, because you said you read long-term books first? How'd you start, and then where you are now?
Yeah, so like the first stock I ever bought was Amazon at like 280. I sold it at like 315, and I thought I had everything figured out. But then got into OTC stocks, and honestly, I'm so happy that that's all in my past. Like I don't trade OTC anymore, and it's not a knock against that. But now I typically trade. I trade a lot of large caps. I do trade small caps, but I don't dabble in the OTC anymore. But those OTC stocks, the trash pot stocks, were what caused me all my losses. And so, and I had an E-Trade account back then, which I still have. I just don't really use it very often. But it was only at that point, I think we only had like 10 or 15K in there. So I wasn't able to day trade. And on top of that, I don't think I could even short with that account. Like it was only longs that I was doing. And obviously after the first blow up, I re-examined everything, and I got introduced to short selling and found early success with it, like many people do, because when you short trash companies, they do tend to let their true colors come through eventually. So like if you don't know anything about risk management, oftentimes you can get out of a trade for a profit, even though you know maybe it wasn't a very disciplined trade. And there's only so long that can work for. And so I thought I was doing well shorting stocks. And then I blew up a second account. And that was when I realized I was like, okay, there's some inherent dangers in shorting. And I had to re-examine all that. And once I kind of rebuilt it from the ground up and tried to figure out how to manage risk on these trash companies, that was when I started to really find a little bit of consistency. And then I stumbled upon SEC filings. And that's kind of like what I think a lot of people know me for. I have a YouTube channel that I put out content about how to use fundamental analysis on these trash companies. And yeah, that was where it kind of took my trading to a different area, where just looking for things in the filings that would give me a little bit of an edge, and then also using strategies that had much more sound risk management controls involved in them. So learning how to manage risk was the biggest key to finding consistency.
So whenever you start to evolve and you start to use fundamentals, and then you start to play, you said you start to only trade setups that had a better risk management kind of instilled in it. What do you mean by, first off, that second part, but also the fundamentals? Like, what do you focus on for you when you do look at fundamentals?
Okay, so the first part of the question, like as far as risk management goes, really revolves around knowing the difference between front side and back side of a move. So like a lot of people I see just shorting anything running straight up, and honestly, it works a lot, but you have to be very careful about your position size and knowing like the possible range of the stock, as opposed to waiting for a top to form and then spotting a lower high, and then if you want even more confirmation after that, a lower low. Because stocks, no matter what you think or what you read or what you see, the market changes all the time. I hear that all the time, but stocks trend. That's all they do. Now, it doesn't matter what time frame you're looking at. If you're looking at a 1-minute chart, a 15-minute chart, an hourly, a daily, a weekly, a monthly, higher highs and higher lows is an uptrend. Lower highs, lower lows is a downtrend. There's no other way to cut it. So using that philosophy of which way is the stock trending and on what time frame, you can start to develop areas to risk against, where you can set limited risk. And even if you get slippage, at least it's not the type of trade where you're going to blow up.
Yeah.
And that, is the biggest key for most new traders, is learning how to limit their risk so that you're not ever worried about blowing up. Now the fundamentals, I'm typically looking for red flags. And I've put out videos about this before, where it's like, if we're reading filings on a company that's priced around $5 to $10, you're most likely going to find red flags, because there's a reason that stock is priced in that range. It's probably got some issues. So kind of learning what is a valid red flag versus what is just something you're going to stumble across on most of these low price stocks, that helps. Always obviously looking for overhead. And the main goal in reading the filings is, whenever you see a stock running up, having a really big move, usually, well, I say usually just to protect myself from disclaimers, but like almost 100% of the time, there is an agenda that is playing out. Now, whether you know what the agenda is or not, doesn't really, the stock's going to do what it's going to do. But if you can figure out what the agenda is, like who's behind the scenes and what they're trying to accomplish, then you can position yourself. And honestly, if you certain filings will lead you to a situation where you will kind of identify what's happening, and you can actually use it to really, really nail a trade.
So what are those differences? Because you said, because you're right, when you're looking at stocks that are under $10, really, you'll see tons of just red flags. So what is that for you, that differentiator between the red flags?
Good question. So especially with the biotechs, you're going to always see companies that do not have good or any revenues at all. So here goes the screensaver again, my kid. Sorry, guys. Anyway, so like just because a company doesn't generate a lot of revenues, that doesn't always equate to, you know, a red flag that would, for me, equal a short trade, especially in biotech. So like biotech companies oftentimes are in developmental stages, so they don't have a product to sell, but that doesn't prevent the stock from having huge run-ups based on data being reported on a study they're doing, or, you know, people anticipating data coming out. So there's all kinds of things that can happen. And if you're like just looking at a company's financial situation, that's not always going to be the red flag that you need. Now, on the other hand, if you see, a lot of times you'll see warrants, convertible derivatives up higher, and you'll know that people they own those, and they would like to convert them and dump them on retail traders for a profit. You'll see a stock running up. And if you know how to read into the PRs as well and kind of like pick apart a PR to tell what's fluff and what's not, you can kind of anticipate that at certain price levels, certain derivatives are going to start getting dumped. And so that would be a red flag that I would put a little more weight into, or something like an ATM. A lot of people, now the problem is that more and more people are keen to these things. And so more and more people know about them, and they are anticipating the same thing I may be anticipating. And so you still really, really need to stick to your technicals. Even if you find huge red flags in the fundamentals, you still need to find a level to risk against and figure out a way to manage your risk. Because I've seen companies with ATMs just get jammed so far up, and like, you know, the ATM will be completely drained. Now this company doesn't have any more stock to dump on retail, but everybody's stuck lower because they were shorting it going, oh, they have an ATM. Yeah. And I mean, I think right now we're in a sector, we're currently in the coronavirus sector. Yep. And what we've seen is these fundamentals go right out the window. But if you don't recognize that, a lot of people are getting hurt because they're trading these really trash companies, and they're screaming till their face turns blue how crappy the company is, but it doesn't matter right now. So you have to understand, one, we're in a sector, and two, technicals are still always going to override the fundamentals.
Price action. I mean, price action is king. It's so important. You know, that one mention of, you know, you're looking for those red flags, and then you wait for, you know, certain red flags that you're looking for, whether it's warrants or whatever it is, and you're anticipating that move. Would you say you're still waiting for the backside, or are you more so in those situations not so much?
It really depends on where we are on the daily chart, or like the bigger picture. So there are times when a move is spiking right up into certain areas on the daily chart where I may go ahead and put something on what you might consider front side of the move, where we're just getting extended really, really crazy on a lower time frame. But I'm still never putting any kind of size on at those points of the trade that are going to hurt me, because I still have to always keep in mind, and you know what, I actually go into trades assuming I'm going to be wrong, because it makes it so much easier for me to mentally cut the trade, as opposed to telling yourself that you're right and that you're going to prove to the stock market that your idea is right and everyone else is wrong. Because I mean, that's such a clear recipe for disaster. So if I do short the front side, it's on much, much smaller size. I'll wait for some kind of confirmation, and then I'll add heavier when I see that. But I would say by and large, I do tend to wait for some form of a top with a lower high. And even if you're shorting the pop towards the high, anticipating that it's a lower high, you still don't have confirmation at that point. True. Because so far, all you have is a high, a pullback, and you don't know that the next push is a lower high. So you're anticipating it. So you also have to keep in mind that if you are anticipating, you're going to get a better risk reward, but you're also going to have a lower win rate. You're going to take a lot of paper cuts. So if you do short, you got to cut it over those highs. You got to admit you were wrong, and then you kind of got to go back to stalking it. Now, as opposed to waiting for a lower high, and when you get the lower low, now you have confirmation that you do have a lower high on whatever time frame you're watching. Now, this is where time frame confluence comes into play, where you may be watching a 1 or a 5 minute chart, but you have to understand that that is a micro picture of a different time frame. So you're extended on the 1 minute chart, but where are you at on the 30-minute chart, the 1 hour chart, So that's where, and you have to use different time frames to figure out where your targets can be, how much of a move you can expect. And even things such as like, is this trade worth taking? Like, even if you're right, is the reward worth the risk? Because you could be right, but there's just no meat on the bone. So like, that's how I tend to structure my trades.
Do you think, and I could be completely wrong on this, but are you trading more so of you wait for that confirmation and then you kind of just ride it out, like ride it all the way, you like to ride it all the way back down to like the average, the mean or something like that? Or is it more of you just look for a certain risk reward, like a 3-to-1, 2-to-1, 5-to-1, and just take it there? Like, I'm just curious on your thought process, because I've noticed those. I don't trade that way. I trade more of, my setup is like gap and crap. I love that setup for me. I love first red day. I love overextension plays. And that's pretty much, and way rotated float, like rotating like 6, 8, 10 times. I love those plays. But it's this one, I personally I haven't seen them lately where they just keep going back. So I'm curious, like maybe they do, and it's just something I don't look at.
So the way I look at that is whatever time frame you're saying it's extended on. We're going to use the 1 minute and the 30-minute time frame right now just for the example, but we're extended on the 1 minute chart. If you look at the 30-minute chart though, you may be able to see a clear area of what this stock has been trending on. So even though you're extended on the 1 minute, your pullback, the piece of the move you're trying to capture should have clear areas on different time frames where you would be calling targets. So I typically use a 30-minute, a 1 hour, and a daily chart as time frames to look for my targets. So if you're extended on the 1 minute, you're probably also much, much more extended from the 30-minute or on the 30-minute chart from wherever this stock has been trending. So you get the big pop, and you have to be looking at other time frames to see where your targets are. And I do try to hold for larger picture or larger targets. And that's kind of also where fundamentals help a little bit, because the really, really trash ones that that they're running this up just so that they can, so you can see someone's agenda play out. A lot of times those are the ones where you're going to get the bigger move, possibly even swinging it, but you still have to be locking in on the way at kind of intermediate targets. So there's definitely intraday targets for me based on other time frames, and then there's also swing targets.
Interesting.
And those are also, the swing targets are still based on a higher time frame chart, so like a daily or a weekly.
That's interesting. So you like to use the 1 minute and then the 30-minute, hourly, and daily. Really is. Well,
I really don't use the 1 minute hardly at all. Honestly,
okay.
I was using it for the example, but I tend to use a 5 minute as my main time frame for intraday.
Yeah.
But I'm also using, so my main chart on whatever stock I'm trading, I have 4 time frames up. And so I can always see where we're at on each one of those time frames.
That's interesting. Cool, man. I never met anyone, at least on the show yet, who uses that like the daily, the 30-minute, and the hourly, along with the 5 minute all at once. That's pretty interesting. And it's cool that helps you find your target, your price targets. I never took the time to look at all those while I'm in the stock, but maybe I'll pay attention to that just to see what I see. But that's cool, man. I'm curious, what would you say? I mean, how long did it take you to find your consistency? Because through this process, you messed up on 2 accounts, and then you start to find your success. How long, or did it take you, a year, 2 years, 3 years? Just put it in perspective for people.
I tell people that I'm still learning to this day, but consistency started showing up around 2-3 years, 2.5, somewhere in there.
Was there something there that helped you during that time period?
Certain mentors. Yeah, definitely. Like, I honestly feel like the most blessed person in the world as far as the connections I've made in the trading community and the people that I have as people I can reach out to and ask questions, talk to. And so that was definitely, I think, the key point in my career was just knowing certain people that could show me a different way of looking at something.
Was there something that, and let me reframe the question, was there something maybe something that like a thought process that kind of came to mind, like during your right before consistency happened for you, was there something that was kind of holding you back that you were able to finally get?
Well, like I said, the second account where I blew up when I had learned to short, there was that time where I took off to kind of save up funds again for my third account, which thankfully have never blown up since. But while I was doing that, that was where I learned about risk management, because I knew the reason that I had found success with shorting was because those trash companies usually do revert back. And so like there's so many trades that were terrible risk management on the trade, but they worked out in my favor. So I realized that shorting works on certain setups, but you have to have risk management. So it was the risk management aspect that was definitely the turning point for consistency.
So what tip would you give anyone out there who might be dealing with that risk management issue? And any advice you'd give anyone out there?
So I think it's a simple process that maybe gets confusing, or I'm not 100% sure where people have the disconnect, but obviously it's probably a lot to do with emotions such as greed and fear and pain avoidance. So like setting risk levels is easy. I think it's the discipline part that causes people the problems, because when it comes to stopping out of a trade where you're wrong, if you don't do it, you might end up okay, but like in the long run, it's really going to come back to bite you, because discipline is the biggest part of trading. You have to be able to do the same thing over and over and over, and at least if it's working. So if you have bad things in your trading and you're disciplined towards those bad things, that's not going to work. You got to find something that works, and you have to have an edge, and you have to execute your edge every single time it appears. You can't say, oh, I'm going to skip this one and I'm going to take this one. Like, you have to let it play out over a large sample size. So whatever your edge is, when it appears in the market, it's your job as a trader to capitalize on it. Now, not every time will it work. No one has a 100% working strategy that is infallible. So you have to go into the trade, like I said earlier, like just assume you're going to be wrong. Set your level of risk, and when the stock goes to a certain price, the level that you set as your risk, when it goes past that, it's the stock's way of telling you that you were wrong. So you need to admit it, take the trade off, and just move about your life. Don't let it affect you. You got to have a short memory. Can't be getting sour at it and letting it kind of mentally just stick with you. You have to just kind of move on, and you have to know that your edge will work if you do it enough times. So even if it's just a 51% probability, if you play it out enough times, you come out ahead.
Absolutely. And I guess I want to ask you one more thing. And then before we wrap up, I want you to share with anyone out there who may want to contact you, the best way to do that. But could you tell me, because you're a family man, if one of your children was like, hey, show me how to do this, what would your steps be to teach that person?
Yeah. Get these kids reading filings for me. That's number one.
Yeah. Honestly, hey, y'all all read these filings right here. Let me know.
Yeah. I mean, people, reading filings takes it's a certain type of person that does it, because they're not fun. They're really dry, a lot of technical jargon. So if I could teach my kids to read filings, that'd be great. I don't know if I'd want them to do it. Like, trading is a weird thing. Like, it's something I love, but at the same time, like, it's a means to an end. So like, for me, what's important is that whatever they do, they're happy. So like, I don't care if they find it and then they want to try it. I won't discourage it. I'll be there to help guide them and teach them anything I may know. But if they don't find it enjoyable, I wouldn't recommend them doing it. So, I mean, whatever they do in life, you should always do something that you enjoy doing.
Absolutely. Absolutely. Well, Ricky, I'll tell you what, where can people reach out to you if they have any questions, or maybe they want to know where you learn your fundamental side? You want to let them know?
Yeah, sure. I'm on Twitter. Obviously, he already plugged that. It was at Ricky Analog. Reach out. My DMs are open. I pretty much respond to everybody that DMs as long as it's not just something that you could Google. Like do a little groundwork on your own first. But I have a YouTube channel. I believe it's Ricky Analog on YouTube, and that's where you'll find like the fundamental videos. I'm over at TrueTrader.net. It's a room. It's a pretty new room, but like it's a really great room, and some good guys over there. I'm also part of the All Day Holds room, and I'm on Instagram. I don't really post much anymore.
What are you not on? Golly.
Yeah, I'm spread thin, but I do what I can. I'm like the way I was telling you earlier is like the way I found mentors that changed my life and my trading and my career for the better. I would love to try to pay that forward. So like I always try to like help traders out. It's not an easy industry. Most people fail, and I'm always here to help the community. I'm always trying to give back. So.
But listen up, everyone. Don't ask questions, because I get so annoyed too, man. Like when they ask questions that you literally can Google and get an answer, it's the most just, it's lazy. And if you're in this job, like Ricky's saying, it takes a lot of work and it's not fun. You better love it, because you're going to have to do a lot of work to even get to just some success. So Thank you so much, Ricky, for being here today, man. Thank you for sharing with me your journey, and thank you for being open to, first off, just being open to help other people if they DM you. So I really appreciate that. And I really appreciate what you do to support the community. And if you don't follow him, you should, because he posts on his Twitter regularly. So thanks again, man. Thanks for being here.
Thanks for having me.